Joining us now, Caruso founder and executive chairman Rick Caruso. Three of Caruso's retail centers, including the Grove in Los Angeles, rank among the 15 largest in the country in sales per square foot. Rick, it's great to have you on the show.
Thank you, Morgan. Great to be here.
All right, we know that the consumer has been resilient based on quite a number of data points we've gotten in recent days and recent weeks. And now it seems perhaps with this news from President Biden just a few moments ago, student loans are not necessarily, at least for now, going to be part of the mix, those repayments. What are you seeing in real time at your locations?
So in real time, listen, the headline certainly is always the question about consumer spending. I understand that. But what we're seeing on our properties is the consumer is still spending. And they're doing it across the portfolio with us, both in the luxury side of our retailers and more of the moderate side of the retailers. Restaurant sales are up. Our traffic on our properties are up around 20%. So we're seeing a lot of growth. But let me tell you what I think is an equally important indicator is that tenants are expanding and they're opening new locations. Now, there's a flight to quality. There's no question. So the better locations are going to benefit from that. But the retailers really have the best pulse from anybody because they understand who their customer is, what their sales are per ticket, and where their customers are located to know where to grow.
Interesting. I mean, that sounds like a soft landing or even potentially no landing scenario if you have businesses that are continuing to make those investments. Is that your take?
Well, it is. But I got to tell you, the boogeyman, is this recession that's maybe looming out there. But in the midst of worrying about the recession, we've actually had an incredibly strong market, right? Mm-hmm. Incredibly strong sales, good performance coming out of, I think, 80% of the companies that report. So it's a kaleidoscope, there's no doubt. But the largest part of that kaleidoscope is doing really well. Now, let me tell you what my concern is. My concern is interest rates. And with the Fed talking about continuing to raise, I think you're going to see some contraction. And everybody's going to have to be really watchful because the impact of that may be greater than we're all expecting. And I think a lot of companies are going to have to do some readjustments in order to absorb higher inflation and absorb higher interest costs. And it may obviously impact the consumer ultimately. Maybe not the top end, but ultimately generally the consumer.
How does it affect real estate? And we talk so much day in and day out about commercial real estate and paint it with such a broad brush. But other than certain types of office properties right now that perhaps are older and under scrutiny and don't have much demand, it would seem other areas within the broader sector are holding up strongly. What is your take on the health of commercial real estate from where you sit?
I think the health is good. You have to look at sector by sector. You have to look at geographically. If you looked at our retail, we're doing very well. You look at retail in San Francisco in the core, it's decimated. You've got retailers turning back their keys. You've got developers turning back keys to shopping centers in downtown San Francisco. So you really have to break it down. I think generally it's good. Again, I think a lot of that, there's going to be pressure on even the good performers, the high performers in strong geographic areas, depending on how interest rates are going to impact them. But I think companies are getting ready for that. Everybody is aware there may be 2 more rate hikes. So our cost of capital is going to go up, and we're going to have to accommodate for that. I also think you're going to see companies really focusing even more on being efficient, cutting back expenses, and maybe reducing the workforce, which has not really been impacted that much. But listen, the commercial sector, the office sector, Los Angeles, 15% vacancy rate in downtown LA. San Francisco, 30% vacancy rate. I don't know how that turns around with crime that's impacting those areas. The homeless situation, look at LA. We're up another 10% in homeless. That impacts downtown. Those buildings, it's going to be a while before they turn around, I think.